Hello, ladies and gentlemen. Good morning. Fantastic day here in Denia, in Spain, where I'm talking with you about insurance. My name is George Grisham. We have position 1.5 in our series of talks or lectures, which means we are still at level number 1, the basic level, but yes, it should be theoretical. But now I'm going to talk with you about real hard practice of insurance. Underwriting. What is it? It's the process of determining how and for how much any particular risk should be insured. The underwriter is a person, is a very respected person, is a very respected member of any insurance company, because he actually determines whether to take a particular risk for insurance or reinsurance, and if yes, at which price, i.e. premium, and at which terms and conditions. And of course, we have specialized underwriters, especially in London and Lloyd's. When you enter this building, the sacrosanct sort of place of world insurance, you have underwriters specializing in different bits and pieces. Personal accident, professional indemnity, war and strikes, just simple hull, cargo, aviation, whatever. But anyway, in each insurance company, in each syndicate of Lloyd's, there is an underwriter. And technically, an underwriter says how much the risk should be insured for. But I'll tell you a story, which says that yes, there is theory of underwriting, and yes, there is practice of underwriting. Now, the theory says that underwriter is basing on his experience on worldwide statistics of what he was doing with the same risk 10, 20 years ago and works up a price. The practice sometimes is a bit different. And my task is really to get you ready to work in real world of insurance rather than just to read theoretical books or articles. Now, I had a situation quite recently, and the situation was carrying cash by a state bank of a particular Asian country just one day, $100 million in local currency, okay? It could be anything, dinars, tenges, manats. Anyway, $100 million is a lot. And no insurance company in the world would be able to issue a policy just on her own. She would go to reinsurers, most probably because of the quickness, because the carriage of this huge amount of cash was supposed to take place next day. So we had less than 24 hours to reinsure these $100 million. And I'll tell you what, we did not. Why? Nice and simple. Because we had an underwriter at one particular position of this stairwell, and the client, the customer, the insured at another. And the evaluation of how much the customer should pay for this was, well, they had each evaluation, an idea, but this idea differed 3 times. So, in theory, how an underwriting process should be. A client, an insured, in this case, a bank who is arranging for carriage of cash, is coming to his insurance agent or broker or directly to an insurance company. The insurance company, first of all, says to its own underwriter, okay, Maxim, what do you think? How much this insurance should be valued? How much the insurance should be paying for this $100 million carried just within 4 or 5 hours within this country? They've been doing it so many times. And he's saying, look, I'd love to say a word. I'd love to say a pinpoint a figure, but really, the final risk carriers will be the reinsurers. Of this $100 million, probably we will retain, that's the term, we will retain about 5%, 5 million at least. If, for instance, the plane goes down, we have to pay $5 million. Our whole turnover is only $30 million a year. And we will reinsure 95 or even 99%. So let's go to the reinsurance manager. Here he is on my scheme. Reinsurance manager, of course, would love to call London directly, but he has to get the confirmation from his vice chairman, from the vice chairman of insurance company. When all the permissions are in place, and they have to have already a little document, actually, explaining all the terms and conditions, he would go to an insurance broker or a reinsurance broker. If the final aim is to get a term quotation from Lloyd's, Lloyd's of London is one of the most famous insurance markets in the world. It's not the biggest, but it's the quickest. And it's most versatile. And things like cash in transit, which we call pice here in London, or there in London, is actually a thing for London. But to approach a Lloyd's underwriter sitting in a Lloyd's syndicate, you have to go via a Lloyd's broker, an authorized Lloyd's broker. And I'm glad to say that our company, Oakshott Insurance, is one of about 240, 250 broking Lloyd's brokers in the whole world. So we can do it. Take a phone or write an email, a quick email, or even WhatsApp and SMS and say, okay, $100 million in local currency, blah, blah, blah. Next day, what's the price? Now I did all this. And of course, I wrote and called about 3 or 4 different leading underwriters. And for $100 million, their price was varying between 0.1 and 0.15, and even in one case, 0.2. What is 0.2 on $100 million? Nice and simple. It is $200,000 for a bank to pay for 5 or 6 days, 5 or 6 hours, come on, carriage of cash between different destinations. But the bank has been doing it for so many times. Why he should be paying that high an amount? So I had to find out more about this operation. For instance, will there be arms on board? Will there be arms on the airfield? How much cash will be downloaded at each particular destination? And, you know, going back to the Asian country, each time it's 1 or 2 hours. And we only had 24 hours, of which, you know, only 10 or 12 working hours. Different time schedules as well, different time zones as well. So finally, my best underwriter from a company I didn't even suspect would be competitive says, I will do it for 0.09. $100 million, it's nice and simple, it's $90,000. Fine, I quote this amount to the insurance company in Asia, and here comes the answer saying that, look, the client has consulted his friend. Oh yeah, his friend is an underwriter. Is he? Or he is not? And the friend in a neighboring republic said, oh yeah, we have insured this for 0.025. Ladies and gentlemen, 0.025 is $25,000. It's not $90,000, okay? Yes, the other republic is 10 times smaller than this one, and the currency is probably not that good, and also the amount was lower, but anyway, the client in his mind has 0.025, maximum 0.3. I have from London 0.9 minimum, or 0.1, 0.12, the average value or the average price of the market. We never got the risk, alas. I never earned anything on this particular carriage. Why? I don't know whether the client, the bank decided just to keep it on their own retention, not to insure and reinsure this risk, or whether they went to some other markets in our area, in our region, which are still reliable, but where the rates are really, really much lower. Yeah, it is normal. Different insurance markets in the world have different levels of premiums quoted, but this is your underwriting process. On the one hand, an underwriter sitting in the world capital of insurance, basing on his experience having worked here for 20 years. And in this case, it was a lady who has visited all these republics, all these countries. And she knows exactly how cash is carried. And she quoted me the lowest price, but still the lowest price was 3 times what the client was going to pay. So the underwriting process in real life and in theory, there are 2 different things. And of course, my task with my 36 years experience in insurance and actually 25 years of experience of writing books, theoretical books, is to bring theory and practice together to explain you, excuse me, to explain to you that yes, there is theory, but yes, there is practice as well. So that was a talk on the peculiarities of underwriting process, including cargo insurance or special insurance. Thank you very much. We're going to continue quite soon. Goodbye.